The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 15th day of January. My pleasure to be here. And the Dow is up 185 at 24,094. In the Chapman Wave methodology, it had to break above 24,014 to start leg D. That's what we've been anticipating. Speed has been part of the issue. A 1 or 2 day pullback and whoop, new high, new recovery high. That is, yep, we did it today. Look at the strength of the MACD. Look at the strength of the stochastic at 97%. As long as it holds up in the 95 to or higher percentage range through this week, it's going to be very positive. Couple of things that I'm looking at right now is that the weekly chart is just finally broken above intraday, that is intra-week and intraday, above the 9-period exponential moving average. And even more important is that you've got concurrency. You've got, look, the S&P right now, SPX.X, is in leg C, and that's a little lower in the alphabet in the Chapman Wave methodology because it's only in a leg C. It should still go to a D. Nice V-shaped pattern here, taking a little longer on the right side to get to those candles on the left. Those incredible 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. One little green candle, 11, 12, 13. Out of 13 bars, we had just 2 little green candles there. Just straight down from the 2800 area to 2345. So this is a very nice bounce to the upside. I like it. The S&P is up 28 at 2610, up 1.09%. The QQQ is also participating. It's up 1.95%. The Dow's only up 0.72%. The S&P is up 1.09. Very nice. What were we expecting? We were expecting a leg D, and there it is, a leg D, a little ahead. Now, this is so interesting. You've got a little ahead in the Chapman Wave methodology in the QQQ, the Invesco QQQ Trust Series Index 100 trading vehicle, and that is says, yep, it could go higher, and it's broken. It's breaking at this moment. The next level of resistance, you got the Chapman Wave inside track repellent line. Make this green. Let's see where that comes out to. All these techniques are going to be discussed in tremendous detail on the 23rd, a week from tomorrow, in my all-day webinar. Go to the front page of TFNN. You'll see it. You know, we managed to get the exact top in the Dow. We were short that exact top. We actually got the exact low. We've got it a number of times. Sometimes it worked, sometimes it didn't. We did have a fabulous entry. An option, a call option in the Dow made about between, depends when you got out, between 40 and 49% again. And so these techniques you're looking at right now, they techniques that have been tried and tested for a very long time. Do they always work? No, of course, nothing works 100% of the time, but they really give you clues. So the the QQQ needs to get to the 163.50 area to be able to break above it, above this resistance line, the Chapman Wave inside track, something else I'll be teaching in that webinar. And lo and behold, we've got the IWM, which was leading the way. Now it's slowed down a little bit. It's down. It's up 0.64% at 143.17, up 92 cents. Not good enough. It needs to break over peak C at 143.99. It needs to go to 144 to start leg D, lagging for the first time. Very interesting. You got the XLF, which was weak early on because of JP Morgan, and now started a very strong extension to leg C. I love what's going on. I know I keep looking at this and saying, hey, wait a minute. Surely we can't be done with that major down move. Well, you know, some stocks, very important stocks, dropped between 25, let's say 20% to 50%. That is a monster move to the downside, and most of the indices went either 20% to 23, 27% down. I suspect we got a pretty good rally coming, and later on we'll get a test of support levels. So let's just go through this one at a time. The XLF acting very well. It needs to break. It's at 24.91 right now. Until it can get to the 25.50, 26.10 area, so it can start to tackle the 26.53 200-period exponential moving average of the daily chart. I'm treating this as a really good bounce. It'll become something more if it can get to the 26s within another week, a week from tomorrow, the 23rd, when I do my webinar. I want to be talking about the XLF. Very positive. We do have a bank stock. It's doing great for us, and that's really nice. Now what I'm going to look at is gold. Gold was pulling back a little bit. Now it's down 2.5. It's stuck in a range, in this upper range, peak G in the daily chart of the Dow. But really, it's the rectangle formation that's important. The close above 1303 would be very positive. The close under 1277 would be not negative. It would just say, okay, more consolidation is needed. And the weekly chart has improved tremendously. Let's look at silver. So gold is at 1288.9. Silver is at 15.62, down 0.06, made a peak E in the Chapman wave with a long-legged doji candle been closing under it, at least going under it for a little while now. We'll see if today closes under it. That's going to be important because then the 200-period moving average in the 1550 area will be the next support level. I wouldn't be surprised if you look at the dollar, had a nice move. We've got something going on, a little bit of something going on with the Brexit vote, and May is going to really be under pressure this afternoon. I believe it's from 2 o'clock our time. We'll see what happens. Look, the dollar acting beautifully, up 58 cents at 96.17. One of the reasons why I've not wanted to get out of the dollar at all since our entry back in the first week of April is that, yeah, we took a little bit of profit. I like what's going on, and I think internationally the dollar is the currency. It was the currency for 2018. I've got a feeling that in the end it'll still be the currency for 2019. I know that that's controversial, and I don't like to look that much into the future without evidence. And the evidence says that it would take a close of 98.20 anytime on any day in the next 2 months to really be convinced that that's the case. We'll see. But I am looking at it and I'm saying, I like this. I like a look at the euro. Peak F right at the 200-period moving average in the daily chart. Pulling back sharply here at 1.139, down 0.007, down 0.66%. Hey, this is serious stuff. We'll see what happens. So let's look at the British pound. British pound, poor old British pound, try to rally. I've got that as, oh, that should be an F slash. No, I can't make, that is a B. That could fail, but that'll be unusual to go straight from a buy mode very quick. Peak A, peak B, peak C, peak D. A little bit 2 days of a rest, and third day, boom, leg E, then a peak E, and it makes a new recovery low. Do you call them recovery lows? Unrecovery low at 1.2543, the low of the 11th of December. Zip, it goes right down, closes way above it, goes to 11.2512, and now we're looking at a rally that's gone to 1.2297, and we're trading 1.279 reverse figure. So let's see the USD JPY as we go out. Basil Chapman, Tiger British Pound, Dow's up 175, S&P's up 28, and the yen is running just a little bit. I'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, we're back. Let me just answer a couple of questions that I got in the immediacy of the break, and otherwise I'm going to forget about it. CCJ. Well, the question is, should I add to my positions? And my answer is that CCJ trading at 12.35, Chemical Corporation metals area. I can never remember exactly what it is. I thought it was copper, but it's nice. It's something. Someone tell me what CCJ does. One of those minerals. So it's trading at 12.34. It's in leg ABC. It's in leg D right now. Got a lovely pattern that says it's going to try to test the November, the 7th high of 12. Oh, that's 78. I said 41. It's 1278 high. That's what I think it's going to do. So would you add to the position? I would add to the position just realizing that the weekly chart says that we might go a little high and then we could take a little bit of a breather again. So I like it because it's got a nice stair-step intra-day and then, intra-week pattern, going to higher highs and higher lows, and that you can see in the monthly chart, which has really gone to an inside D, meaning it's still, the whole thing is underneath the outer boundaries of major July. No, I don't know what it was. Was that August? November low of 741 back in 2016, and then just in January that next year of 16, it went to 13.36. So it's in that, and it's had an inside, a rectangle inside buy mode, gone to a D, and now it's acting really well, considering it should have, it's going to alternate. If you look at the candles, it's got almost, I call this the sandwich effect, green, red, green, red, green, red. Sometimes it takes two monthly bars, but it goes back to green, red or green. So this is that alternation. The next month, maybe February, will be a red candle. So far, I think it's doing well. So the answer is yes. But be prepared that you could get a gain and then that gain gets taken away as it comes back, because I think the 1220 to 1180 area is liable to be tested sometime after this little run is finished. That's all. The next question was a question about TVIX. TVIX has got the Chapman Wave Eiffel Tower pattern straight up. It goes from the 30s to 86.50. That was on December the 27th. Reverses down, comes straight down, only red candles, one little green candle, all red candles at 45.89. I would not be surprised if the 43 area is where you have a little bit of a bounce, and then it goes under that. And I wouldn't be surprised if the VIX, after some kind of news-related kind of scare in the next, maybe options expiration Friday, maybe Thursday afternoon to Friday or Monday, you're going to have some kind of some news event that says, oh my God, market's going to come back down again. And that would get the VIX to bounce a little bit from 18. Remember I said in the 18s, we're looking at a completely different ball game because that gives you a chance to get to the 16s. Once you're in the 16s, you're back home. The market can continue very nicely to the upside. So this is a really important phase. This week is Tuesday. This week is just 2 days. I don't know. It feels like a lot more. Anyway, this is the uppercase A. Straight up, straight down. Chapman Wave Eiffel Tower pattern. So next question I had was IWM. I just did the IWM. We'll do that again because I want to just finish up to say that the IWM led the way up. I've got a feeling that the IWM, after this big move to the upside, is going to take a bit of a breather, and the others are going to play catch up. I had a question the other day, I can't even remember if it was yesterday or Friday, about Microsoft MSF. Look at that. Morgan Stanley Emerging Market. Hey, that's a nice chart. Write that down quickly. MSF, excuse me. I'm just writing this down. MSF. Okay, not a bad looking chart. Let me see the EEM while I'm doing this. EEM, not as good. Very interesting. All right, MSFT, let me do this because I want to go to a whole bunch of other things. Microsoft trading at 104.77 up 272. When I was in at my workout this morning, I saw on CNBC that Microsoft and was it Walmart? I think it's Walmart. Microsoft is going to team up with someone, and that was very important. And as a result, both stocks, I think, were up earlier on. Let me see news. Where is my? There it is. News. Here we go to my news. Click. News. Microsoft. There it is. Waiting. Walgreens Boots Alliance. Microsoft established. Okay. Good. So they've got something now with Kroger. I think they've got something with a number of the different companies and a number of the drugstores. So this is going to be very interesting for Microsoft. Yeah, how I spoke about Microsoft the other day. Oh, it was yesterday. I was looking at the chart and I said, wow, Microsoft made its high in 1999, right? I don't want to squash the chart. I just want to say that once it broke above the whole 50-something area, 56.86, way back in 2015, 2016, that was really important. And Microsoft is it really has changed the company. It's moved in with the 21st century. It's not stuck in the 20th century anymore. 21st century, it is a stock that you cannot ignore. Look at that from the top of 116.18 to the low that was made just recently in the 94s, 93.77, wasn't that? What did I say it was yesterday? 93.96. So 93.96 and now trading at 104.81 leg C. I like this. I love the fact that in this market, remember I called it a rotational market back in the summer of 2011. Man, I tell you, this is just the whole correction has been a rotational correction, and now the lows have been made in unison low on the 24th and 26th of December. Not everything, and not everything is going to rally in unison. You might get in 3 months, 4 months. You might get a retest. Some will break to lower lows and some will not even come close. So this is going to be very important. And Microsoft has really reimagined the whole company. Fabulous. I love to see that. It's back on the road again. So now I want to go to the TLT. Questions coming in. Okay. TLT is, yep, this is what I say to subscribers. If the bonds keep coming down, it means money's coming back out now of bonds and going into the stocks. I think that's what we're looking at. Rotational, yes, but it's going into stocks. Very important. I would love to see at 120.02. I'd like to see a close under 118.30 in the next week in the TLT. That'll give support to the general market. Okay, so now I can go to crude oil. That wasn't where I was going to go. I went there only because I remembered it at the last minute. Crude oil needs a leg C in the continuous contract above 53.31. 53.32 starts leg D. That'll help the weekly, certainly help the daily, but it'll help the weekly. But until the weekly, daily can clear this whole mess in the 54s, 53, 54s, it needs to close above 55.60. And that's going to be really impressive if it can do that. Now, if it closes above 54.82, that's going to be a break above the belly, above the oval high. Remember the invert? Oh, I don't want to do this right at the break. I don't even want to take time later on. Oh, it'll be very positive if we close in the 55s. There you are. Okay, got my questions coming in. I'll deal with them as soon as we return. Basil Chapman, Tiger Technicians Hour. We still have no shorts. Still looking at the bullish side. Ooh, I went down that long. That's going to last. Up 100.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and yes, we were looking at CCJ. Was it CCJ? And that is uranium. I should have remembered that. I never remember it. So the inverted Chapman Wave storm leg formation, remember, it can go to the upside, and when it goes to the upside, when the beak is formed, it goes down. If it closes below the body, it's got a whole bunch of implications, but when it does turn around, it gives you a fabulous rally. So this is the exact opposite. There should be, there's the leg. Now let me just type this in, upside down. Remember, leg, body, neck. Oh, it's starting to look messy. Neck, and beak. So we followed this. I discussed it as it was happening. I said, this is what we're looking at. Another Chapman wave. I always laugh about these things. You've got people like Steve Nissen who did the candle stuff. He made courses and had videos and all sorts of things on every single one of the techniques. And I've got so many. I've got my black box that I talk about. The only one that I don't give the numbers out is the Chapman wave chin gauge. Otherwise, everything I discuss never had a separate tool for each one. I could have had separate services for every single one of these things. But I love it as an umbrella, a package to the Chapman wave methodology. Then if you go through, look at this, the MACD cross positive. Look at that beautiful move in crude oil. And now it's stalling because the stochastic went over 80%. Now it's at 86%, but it just dipped down. The on-balance volume never confirmed, but everything is still very positive. So crude oil should go a little bit higher. So what we're looking at here is that we've gone through the yields, we've gone through the well, let's look at the TNX. That was a question. TNX right here. TNX is trading up 7 cents or 7 ticks at 27.17. It's stuck in the lower range. That's all. All I'm saying is that I think yields are going to rally some. I don't think there's any issue with yields. They're still where they were. Look, let me show you this chart of the 10-year. Look at this. It's still stuck. If I put a horizontal line right here, look at this, right there, horizontal line, right there. Look how many times we've been here. Let me just make this big and fat because I'll have to do something. Oh, I've already done that. Look, let's get rid of this, get out of that. And you see this line here? This is what I always say. Look how many times we've been here, this pinkish line. You've been here in 2018. You touched it back in 2017, over it in late 13 and early 14. Over and under, all the way through 2009. So this is just not a big deal at all. I don't know why rates would have been an issue. The issue was, what would the Fed do? And that's really the issue. And the Fed's not going to do anything much at this point. I think there's a surprise coming a little later on, because I think there are going to be a couple of reports that come out, and the Fed is going to say, well, if we stick to our methodology, and that's going to scare the market. All right, enough with that. Question here. Let's go through one at a time. Question was, right there. Why did I lose that? Oh, I'm sorry about that. Oh, there it is. Okay. The question is, Basil, can you please analyze hubs on the show today? Hubs. Hubs. Trading, whoa, up $4 at 144.89. Really nice action. HubSpot Inc. server software. I think they might be situated right here in the Boston area. Let me see. Can you please analyze hubs on the show today? I entered the position on the 26th of December, reversal day just under 116. Wow, how nice is that? The low was on the 20th of November at 108.39, but you got a fabulous entry. This is a stock I've been watching and have wanted to own for quite some time. A Cambridge-based company that plays in the inbound marketing, sales, and service software space. The company is quite disruptive in its space. I do remember that. I hadn't really looked at it for a little while. HubSpace. This company is quite disruptive in its space. I used to own it in the 30s years ago. Banging head on the wall now. Hey, don't bang your head. You did really well there. You're going to do very well now. You've already up very nicely. Don't. Hey, a trade mist is a trade mist. I mean, those are famous words said by just about everybody. A trade mist is a trade mist. Daily and leg B with a decent technicals. Actually, today it went to C. I know it started C yesterday. Oh, I know what you're doing. So this is what we need to do. The low of 108. I said to my subscribers, I'm going to show what I'm going to be doing on my courses every day until we do that Wednesday a week. So this is what I'm looking at. I'm going to show that the low that was made, in this case at 108.39 on the 20th, let me just make this bigger. We'll have a little lesson here. Oh, and you know what I'm going to do? I'm going to add bars to the right side, space to the right. Let's just make it, usually I go 17, let's go 14 for now. Okay, so what I did was, there's a cup formation from the 162.20 all-time high on the 13th of September of last year. It comes down very sharply to 108. 56 points, 50, whatever it is, 54 points. And now it started to move to the right, very choppy and inverse head and shoulders, all sorts of things you could make up, but it's not the point. The point is the MACD is strong, the stochastic's at 97%. So this low from the 20th of November goes to peak A right there, then it goes to peak B, then it pulls back. What I do always is I start another, I put a little X here and say, okay, there could be a little mini Chapman wave buy mode underneath that. Yep, there is. It goes to peak A, and then it goes to peak B. And this peak B is really a gray. I didn't have time, so I'm calling it a gray peak B. Because why? It is underneath the previous peak B. Now you've got not just an overlapping wave, you've got an overlapping wave that should always go to a D. That's the rule of overlapping, Chapman wave overlapping waves. It is part of my CD introducing the Chapman wave methodology, chapter 26. No, I think that's 16. Yeah, chapter 16, overlapping waves, and it's also sometimes called an inside Y mode. So here we are. But the moment it breaks above in leg C, in the gray leg C, it goes above the high of the 4th of December, which was a peak B failure, 139.63. It reactivates that peak B, and now you've got an overlapping wave. You've got your off-road going to your major highway, and to keep up, you've got to use a lot of speed to get up with the traffic that's already traveling, right? Your access road goes right on, and you're traveling at good speed, and you take out B, you're in C, and this should go to a D. The next resistance is the Chapman wave inside track repellent line, which is at about 149. That's going to be strong resistance to, hopefully it can get there, right? So I love what you did. Now, so leg B in the daily is now leg C with it. That's really high, 162.20 to go from 144. So I only go step by step. Next step is the 148 to 149 area. That's the daily. We'll come back. We'll do the weekly, which is in leg B, which is what you said. Yes. Basil Chapman, Tiger Conditions out. Dow's up 154. S&P up 26. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So remember, the market's made up of cups and arches. Cups and arches. Sometimes it's a V, sometimes an inverted V, but basically you're going from the left side down to back to the same price on the right side, or vice versa. So in the Chapman wave, you're always looking for Ds. You got a D in the 2-minute chart with a little doji right there at the high of 2613.75 in the E-mini. It turns out to be 5-minute chart peak D at the same price, and it turns out to be a 10-minute. So there could be a little bit of an hiatus right here as the market takes a lunchtime breather. Let's get back to our story. So here we go. So the monthly chart, so the weekly chart is in a gray leg B. The MACD hasn't crossed positive. If it does this week, I probably will say, you know what, I think I'm going to give this a buy signal to buy mode designation. But really at 49%, I want that stochastic to be more like 58%, maybe even 62% for me to get a weekly buy mode. This is really good action. It says there's a lot of support in the 141 to 136 area. 134 area in the daily, 137 to 134, and 125 is the 200-period moving average that it broke away from. So any major turn down, that's the area you want to be watching, the 134, 133s. But I love what's going on right now. Leg D in the 120-minute chart, and the monthly chart is improved. You are now more than 50% from the high to the low, retracement to the upside. So at 162.20, with a low of 108, you're already at 145. I mean, this is lovely. I've been saying to subscribers, we are focused on really good stocks, and the really good stocks have been acting beautifully in this rebound. They've actually been leading on the way back up again. So you say weekly is a leg. At the time of this writing, just broke above. That's daily. We just did the daily. Weekly is in leg B with technicals improving nicely. Yep, above the key EMAs. Excellent analysis. Monthly during the November decline just touched the 20 EMA. Yep, there it is. That's my 14 EMA. Monthly now above all key major averages, but technicals not ideal. Yep, the technicals in the daily are really good because the MACD never even got close to crossing negative. And the stochastic is at 72%, but that's not bad when you consider how far it's come down. So the technicals, the price is better than the technicals. Let's put it that way. So wonderful. Wondering what to do. No. Yeah, wondering what to do here. I'm thinking that the 104.9 is a potential level target. Yeah, hey, very good. Thanks. Regards, Manjeet. Manjeet, you did a great analysis. I know that over the years you've really developed a wonderful understanding of the Chapman wave methodology. You use it with your own techniques. I love that. I like what I'm seeing. It was a leader on the way up. It was weak on the way down. It was a weaker one on the way down in the sense that it never broke down like the others. In other words, it was stronger on the way down. It wasn't as weak. That's what I should have said. And now it's rebounding fabulously. There are a couple of stocks that we're focused on in my newsletter that are just like this. This is important, very important. So I like it. And I think you've done your analysis. All I can say is that if you wanted to add to it, gosh, I should have emailed you immediately this morning back to say, hey, get it right now. It's rallying. But even here, I would say to you, you could add a trading position at 145.84. And if it goes in leg C, if it makes a peak C and then pulls back to 142, you could have, because you're in a better position, this would be your trading position. Give it about 2-3 points, stop. And then when it gets to a D, just use a trailing stop. It might not pull back to the gap or much below today's gap if it goes to a D, and the D is in the 149 area. So yeah, I like it very much. Next question is, Kim wants to know, as several indexes are making leg Ds, let's just do that right now. So you've got the Dow, INDU, leg D, but not a big leg D. And this is important. It's a good point to Kevin's question here, because so far, just a nominal leg D in the daily Dow, the S&P nominal new leg, but it's in a B. I'm sorry, I shouldn't say nominal. This is a good leg B, but it was the QQQs that I don't know if I would call this nominal, but it isn't. So far, it's just a nice leg D. So the question is, would I look at shorts? And I'm going to say, I think it's too soon. We had a bloodbath just a couple of weeks ago, an absolute bloodbath. I mean, anybody who was long, who looked at their portfolios at the end of December said, oh my God, what am I going to do? And now they're looking at their portfolios and saying, oh, business as usual. Every pullback becomes a buy opportunity. I do think there's going to be a sharp pullback, and I think there's going to be a cluster of China, the whole impeachment thing, the non-impeachment thing, I should say. You're just going to get a cluster of bad news. And if it comes together, yes, you will see. It's only natural for the market to pull back. And that's where the VIX has its next big bounce. But I'm saying I'd wait. I just see too many stocks that are being missed on the upside. In other words, this Q is in a buy mode with an up arrow. MACD's good stochastic said 94%. I don't want to short anything that pops into 94% and then flattens out. No. Yes, there are stocks, and I would go through certain stocks as vulnerable. Certainly, U.S. steel would be very vulnerable if China, turns around and says, you know what, we're not going to be buying steel from the, just anything like that, commodities. But in the meantime, I'd just be real careful. I'd much rather be looking at the long side of positions than the short side right now. You had opportunities on the way down. It was really severe from October to the December low. I just think, yes, there are opportunities, but on a short-term basis, I know you don't like it on a short-term basis, I say, yep, I'm looking for a short-term trade to the downside. Not yet. Maybe options expiration will give that opportunity. No, I think you got February. That's probably the period, late January, early February, I'd be looking. So I hope I answered that question. Next question I had was, within the context of Amazon, here we go, Amazon trading up 49 at 1666 right now. Hasn't made a leg D. It should make a leg D, and that'll be 1 penny above peak C of 1676.61. You go to 0.62, you've started leg D. And that'll extend if it's this week leg A, and then you're finally going above the Chapman wave inside track repellent zone. That'll be really good. Let's see, next thing we're looking at is Goog. Try to make me say alphabet. Goog trading in leg, it made a peak B, doji candle, went under it, and now it's trading at 1074, up 29. It'll take out 108.84.57, starts leg C, and that leg C says there's a good chance it's going to hit 1091, the 200-period exponential moving average, and then it might even attack that big spike up, news-related spike up from the end of December into the 1120 area. So it's improving, but it's not great. But let's go to Netflix. Netflix, a lot of news lately on Netflix. Whoa, look at that. Netflix trading at 356. Makes a trough F low at 230, whoops, right there. 231.23. 231.23 on the 26th of December, and now it's trading at 356. Unbelievable. What Netflix giveth or taketh away, it giveth back. I'll be right back. Dow's up 144. Basil Chapman, Tiger Technicians. Are we getting this rest period? Yeah, there it is. There's the dreaded HPAT. I'll be back to talk about my webinar.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Let me just get out of this. I won't do it now. Let's get out. Boom. So in my CD introducing the Chapman Wave methodology, there's a pattern I call the lowercase h, the dreaded H. There it is. I spoke about it just before we took the break. There's that E-mini, the S&P E-mini at 2607. It makes a high of 2615.37 or something. It's 2613.75. Pulls back and then tries to rally and fails. And now it is trading underneath the left side low. If it closes under that, that makes 2609 to 2610 resistance. But once it gets back to 2613 at any point today, there's a good chance that it'll retest the highs, but one step at a time. Look, peak D in the daily, doji candle. Peak D in the 5-minute chart, peak D in the 10-minute chart. I mean, techniques, these are the techniques we're going to be talking about Wednesday a week in my all-day webinar. I mean, come on. I mean, gee, these work. You've seen them work live right here. So 230, whatever it was, 30 something, and Netflix goes up to 355. Fabulous action. I've never understood Netflix. I have it. I don't know if we've ever been able to get onto anything that we actually like more than once or twice. I'm just not very good at that. Actually, I just don't have patience, and I'm not big in watching things. Yeah, so people love Netflix, I guess. Look at it. Makes an all-time high of 423, plummets down to 231, and now it's trading at 255. I mean, 54 point rally. That is really good. Okay, so you've got your high-tech Netflix type stocks doing very well right here. Apple had a problem. It's trying to rally, but it's really stuck. Apple's got a different problem. Apple has a product problem. So we're going to look at it that way. The others are having a market problem and a stock market problem. Big difference, all right? Apple's out of the picture right now. I said it's more intermediate term sell signal that I had, monthly one. All right, so remember, in the Chapman Wave, we're going to be looking at all these techniques, how you can trade, how you can use shorter term for your more intermediate term to your longer term. It's just very comprehensive. I'll be giving you a lot of data beforehand, and I'll follow up with you all-day webinar Wednesday week. Stay tuned. Dave White's got a fabulous webinar coming up tonight. Is it tomorrow? Tomorrow night. And have a great day. I'll see you back with Tom later.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.